So now we have a really exciting panel, Trends in Energy Metals, and what will be discussed is net zero carbon emissions, capital cost and reallocation, developing the North, moderated by Egizio Bianchini, Head of Metals and Investment Banking, Stifel GMP. Joining him, please help me welcome Phil Baker, CEO, Heckler Mining, Mark Selby, who is already here, Chairman and CEO, Canada Nickel, Mike White, President and CEO, IBK Capital, one of our sponsors, Michael Rowley, President and CEO, Stillwater Critical Metals. Take it away.
Great. This is on. Excellent. Well, I was worried that no one would show up, but thank you for coming at 4:30. We have an hour scheduled, so that means we're keeping you from your drinks. So we'll try to be insightful. Well, thank you everyone for coming. I thought maybe I'd introduce the panelists this afternoon. And I've had the pleasure of getting to know most of them. First of all, Phil Baker, second to my left. Phil is from Heckler Mining. Heckler Mining is one of the oldest companies listed in the New York Stock Exchange. I believe it's 131 years old, and I think Phil's been there for all 131 years. I'm just kidding. Some days it feels like it, I'm sure, Phil. Now, Phil's been with the company for 21 years. They are the U.S.'s primary silver producer, and to add to that, and I think a lot of it, this incorporates the theme this afternoon, they're also the third largest producer of lead and zinc. So he's got a lot of bases covered with those three metals. I think, I'm eager to hear from Phil exactly how, especially silver, links into the decarbonization process, but no doubt that Hecla's uniquely qualified or uniquely placed to supply some of the metals that we're going to need down the road. Michael Rowley, who's at the end. Michael is with Stillwater Critical Metals. He is a founding shareholder. He has experience in the exploration in mineral testing and environmental industries and capital markets experience as well. You also, Michael, hold several patents in mining technologies. Happy to hear about that, and I think that puts you in a position to talk expertly on some of the ways that we can improve our technology to again decarbonize our environment. Mark Selby, who you just heard from the previous talk, I had a great opportunity. I hadn't met Mark before, but I had a great opportunity to speak to him this afternoon. He's got a fascinating project. Didn't realize that raw rock could actually eat up CO2. So we'll be interested to hear that. He's also an expert on nickel, which is one of my main focuses. And you come from the Inco lineage, yep. and held several senior management positions there, and he's recognized as one of the leading authorities in the nickel market. So probably want to hear about that. And then last but not least, Michael White. It's interesting to see Michael here because I started off with his father, so now yes. I'm with the son. But Michael is president and CEO of IBK Capital. It's a boutique investment bank. They've done a lot of work, about $600 million, raising amazing money and for mining companies or for companies, excuse me. And he's advised on about $4 billion of M&A transactions. Next time you advise somebody, let me know, Michael, because Great Bear, Noront, Western Goldfields, and Eagle Hill all were bought out. So when you have the next one, call me so I can invest.
and Canada Nickel too.
And
I'll add that. That's not in there. We helped Mark find.
And Canada Nickel.
Yeah. Anyway,
so those are our panelists, and thanks guys for agreeing to do this. I thought maybe I'd take just a minute to frame the issues, and then I'll let you guys go at it for that. But so why are we here? The way I like to put it is, in the last 10 years or so, I've looked at the world and I saw this decarbonization trend starting in about, I guess I got onto it really in 2013, 2014. And the way I like to, I'd like to explain it to people that maybe aren't as associated with this every day, although most humans should be associated with it, but people don't think about it. I liken this to the renovating the planet. We've decided that we're going to renovate the planet, and we decided that we're going to do it in 20 years. So anybody who's ever renovated your homes, it's never on time or on budget, and I think this one here won't be on time or on budget or anywhere close. Now, some of the goals I think that the global society has set for themselves is net carbon neutral, pick your target, limiting global temperatures, pick your target, and then we want to go to close to 100% renewables by 2050, and which is going to be one hard task. And then we want to eliminate the use of all carbon-loaded fossil fuels, including natural gas, which is now a transition fuel. But here are the issues. Anytime you renovate your house, and it's the night before you and your family are renovating your house, it looks fantastic, but it needs renovating. 1 month later, it's a god-awful mess. And you say to yourself, why did I ever do this? Nothing's on time. It's a mess. I can't live in it. The world's going to have to get a bit more messy before we get to the ultimate renovation that we want to get to. The unfortunate truth is, if you talk to most experts that will not, tell you what people want to hear, is that the use of carbon-based fuels is actually going to have to go up. During the renovation, you need buzz saws, and you need electric, you need all kinds of tools, and you got to bring in all kinds of trucks and things like that. And we're just going to be using more carbon-based fuels. There's just no way around it until we get renewables and other fuels up and running. We also don't have the technologies, and Michael, maybe we can talk a little bit about that, because we just don't have all the technologies that we think we have. They don't work right yet, and I think we have to advance the technological development and invent new technologies to get to where we want to be. And then I think last but not least is that we've decided, for a lot of different reasons, that we are going to take an incredibly efficient way to source energy and transport energy, that is fossil fuels, into an incredibly inefficient way to transport fossil fuels. One could argue that this wind and the sun and other renewables are more efficient than drilling for oil or natural gas, to give you that. But then transporting that kilojoule that you generate and storing it is quite the feat. And I think that's the main reason. I think that the expectation is that our usage of the metals that that the mining companies in this forum are presenting is going to go up. So we need to extract more metals. We need to do it at a faster rate. We need to do it with a lower carbon footprint. One hell of a challenge. So with that in mind, maybe what I thought I'd do is ask each one of you, and maybe I'll start with Mark. Mark, is decarbonization going to happen?
100%. The horse has left the barn. You've got governments who are going to basically do their best to price carbon out of existence. It's going to take a while. As you said, we'll probably have to use a little more before we start to get to use a little less. But every business needs to think about how they retool their business for that world. I think the best analogy I can think of is if you go back to the 1990s. Internet, Amazon popped up and it sold books. And, I was in management consulting at that time, and it was clear, this was going to transform, and if you're a bricks and mortar retailer, you really needed to rethink your business, because these guys were going to come and eat your lunch, and a lot of them just kept doing the same thing over and over and over again. And now ask Barnes & Noble, and ask all of the book chains that disappeared, and ask all the merchandising retailers that have disappeared. Oh, shoot, maybe I should have got on that a little sooner. And I think for mining companies and industry in general, it's not, so I'll get to it next year, maybe in a few years, it's now.
Okay. Michael?
Yeah, I agree. And like Mark, ultramafic rocks have a capacity to bind carbon dioxide, so it makes sense to apply that. And I would take it a step further. We're both sort of bulk mining scenarios, you're moving a lot of material. You've got a lot of capacity to bind carbon dioxide. Run with it. The studies that we've seen are showing that reacting CO2 with rocks, as we're both proposing to do, is the cheapest method by far. Any other method is looking at, what, hundreds of dollars per ton CO2.
Even $1,000
even thousands
per ton. Yeah.
To make it feasible, right? CO2, thankfully, is very reactive. It can react with an alkaline solution. But then what do you do? And that's your thousands of dollars. This is an elegant way to decarbonize. And I'm very pleased to see Vale reporting their nickel as carbon dioxide emission per ton of nickel. I think that's a step in the right direction. It's obviously much cleaner than the laterites, and we think we can take that further and decarbonize while we're doing it.
Michael, maybe you can answer the question in that if the society does go to a much more decarbonized world, who's going to pay for it? Is it going to happen, and who's going to pay for it?
Yeah, so just maybe to step back a little bit, I agree with them and Mark's comment. It is happening, and it's happening now. So you ask who's going to pay for it. Companies are paying for it right now. Very simply, a carbon credit is removing a ton of CO2 from the atmosphere or stopping a ton of CO2 from going into the atmosphere, right? So you have the planet that needs to curtail that. We have too much carbon dioxide going into the atmosphere, and in order to do that, 179 countries now have signed up to these accords. You hear it through COP26, right? We had COP23, which was the Paris Accord, which a lot of people know about. But it started way back. The one of note was the Kyoto Protocol, which was COP3. And that's where the world really decided, how are we going to do this? How are we going to have companies do better and get ourselves to a zero carbon footprint by 2050? And who's going to pay for that? Well, it's being done now in terms of new initiatives, right? In terms of new builds. You mentioned renovating a house. Those are geared towards a smaller carbon footprint, but we have to get there. And to your point, the world needed a way in which to try and pay for corporations or have corporations make money from pulling CO2 out of the air or stopping CO2 from going into the air. And that is the carbon credit scheme that we have right now. And so if a company, back during the Kyoto Protocol, it was a very mechanical, I'll call it a mechanical approach. So if you opened up a wind farm or a solar farm and you were able to turn off a coal-fired plant, then you got credits for that. You fed that electricity into the grid, the idea being it's clean energy, therefore less demand for CO2-laden energy, and you were paid for that. Right, and so there's everybody, society paying for that carbon neutral electricity. It had to go further than that, though. So now the world has begun to mandate pricing for these carbon credits. Canada, as an example, where we are here today, it's a wonderful country, has said that by 2030, corporations, if they want to buy a credit to offset some of their pollution, because they're trying to catch up, they're renovating the home, as Egizio said, they're going to have to pay, by 2030, they're going to have to pay $170 a ton for that. It's right now at about $50, it goes up $15 a year. By 2030, it's going to be $170 a ton. And so that's who's paying for it. The ones that can't get on side soon enough, right, like Mark's project will be well on side, have to work hard to reduce their carbon footprint, and the gap will be to buy carbon credits that are produced by other companies through various initiatives that they're paying for, but then they get paid for the credit. I produce a credit, I get $170 a ton. Reforestation, right? That's where you take some land, you put the trees back on it. That costs about $50 a ton to reforest, $50 an acre to reforest land, you get about a ton of a credit per acre. So it's $50. Today, it's break even. Next year, it'll be 65 that you get from a corporation that needs to buy that credit. After that, it's 80, and so on until you get to 170. So that's what's going on right now. Corporations and people, citizens, are paying for it, and will continue to pay for it until we all, as a society, as a globe, get to a point of zero carbon footprint. And I'll stress too, I brought up a reforestation. An awful lot of credits are needed. Right now, there's 7.9 billion people on this planet. It's about $3 a ton per year of CO2 emissions by all of us. We're all guilty, right? Everything that we do in our daily lives. We as Canadians do 3.9. So some societies a little higher, some less, but let's just say it's 3. You can see that as a globe, we need billions, tens of billions of credits. In other words, tens of billions of offsets or tens of billions of initiatives, of tons initiatives to reduce ourselves to zero. So it's going to take a while. It's going to cost a lot of money. But that's forced the planet to not just look at these mechanical ways of doing it, but also look at preservation and conservation.
So, Michael, we'll come back to this.
Anyway,
because
I could go on and on and on. Sorry.
There is. We'll get back to it a little bit later in the discussion and talk a little bit about how carbon credits are generated and how they're audited and things like that. Phil, maybe we can come to you. Look, you've got 4 Canadians on the panel, and you're the only American. So maybe Phil, I thought it would be interesting to get your insights on how the U.S. in general views mining. How does it view it today? Is it going to change? What are your perspectives? And you've been at this for a long, long time and come from a mining state.
Not as long as you, Egizio.
Not as long as me. Close. But
Terry.
no. Yeah, there's Terry. He's been around longer than all of us. But Phil, what do you think?
Well, look, the U.S. there's a change afoot that's happening in the United States. There is this recognition of the need to change our sources of energy. And I was just really struck about 6 weeks or so ago, the U.S. Senate had hearings on the need for minerals. And they had hearings on the demand for minerals. And the thing that came out of that struck me more than anything was a recognition that we're not going to get to where we're aiming for without material changes in basically the permitting laws of the United States. So Clean Water Act, Clean Air Act, NEPA, Environmental Species Act, all of these things are barriers to getting to where we need to get to, and particularly in the United States where there's a recognition with COVID, you saw it with COVID, you see it with the Ukraine war, that we don't produce the things we need from the places that are friendly to us. And so as a result of that, you're now finally seeing on the Democratic side of the House a change in attitude. And it's not going to happen quickly. It's probably a 2 to 4 to 6 year process. But I think over that time, you're going to see changes legislatively that's going to change. It's going to take steps to recognizing that we're behind the curve and we're not going to catch up. We're not going to be able to process materials, let alone mine it, in the United States without changes. And that's a remarkable thing. You'd have to go back to the Clinton administration to really have the last time where there's a bipartisan belief of a need to make change, fundamental change.
And do you think, Phil, that it's a bipartisan, and you'll see it not just in the coastal states, but also in the Midwest and vice versa? I mean, is it going to be a wave? Because I think, historically, when America gets behind something, it just gets the job done, right? So the question, I now work for an American brokerage, and I think the U.S. will come to its senses, and then, you know, whether it's the Highways Act or World War II or like anytime the U.S. in the last 150 years has done anything, when they put their minds to it, they've done it.
Well, and you have this environment, and I'll use creating solar farms where these laws that have been put in place have prevented the construction of these solar farms. So for the first time, you've got this conflict that's occurring within the environmental community that you just didn't see before. And so, yeah, I think there's no doubt the U.S. will be behind it, and it will be bipartisan. Now, you're always going to have, you know, fringes on every end, but you know, the middle is going to come together. Again, though, it's not tomorrow. It'll take a couple of election cycles, I think, to really see this occur.
I tend to agree with you, Michael. Let's talk about the supply chain. You've been involved in critical minerals. You've seen various governments announce critical mineral strategies. You've been around for a long time. You have some of your own technologies. What are some of the challenges? You know, maybe that might not be as apparent to the supply chain. How is the supply chain going to develop, not only on the extractive side, but, you know, I mean, most of what we actually have to build is not the mines, but the actual processing side. It also doesn't exist. So how do you see all of this developing? Give us your sense of how it's going to happen.
Sure, and from the point of view of an American project, building on Phil's comments, I mean, China controls critical mineral supply. I think we all know that, 80% on average, 68% of nickel, 73% of cobalt. You know, we need these things in the U.S. You've summarized that very well. In terms of American supply and domestic supply, yeah, we need to bring it back to North America, and there's a total lack of quality projects in a number of those commodities in the U.S. Where are the nickel projects? You know, Canada Nickel's a good one in Canada. There are a few others. The U.S. nickel supply right now is one mine, Lundin Mine's Eagle mine. It's closing in 2026. It'll be replaced by Talon with Tamarack. What else is there in the pipeline? You know, we're an upstart and we look really good. We need a lot more. In terms of supply chain, I like the process you described of 2 to 4 to 6 year change. We need to see that in the U.S. You can build a mine in certain places. I think you can where we are, but we need that to come down to the earlier stage levels. They're still talking about processing requirement right now and more advanced stage projects.
Yeah, well, we're sitting in a province where you have maybe the greenest power of anywhere in the world. I mean, it's almost all hydroelectric. In this province, we have one of the cleanest aluminum industries in the world from here, just by virtue of the fact of where the power comes from and how close, you know, this province is to a lot of the materials that you need to make aluminum. It would seem to me that and I think the Quebec government is helping, is seeing it that way, and I wish the federal government would see it that way, to make this province and you know, Eastern Canada a hub for decarbonization. So that's my hope. Do any of you guys see that? I mean, Mark, do you see that happening? Because I've been disappointed, frankly, in the last 2 years in the response to this government.
Yeah, they're getting there, but honestly, it's, you know, there are very few things in life that are kind of no-brainers. If Skarn, who does all the carbon benchmarking, they've got the carbon content of all the grids, and if you pull up the file, there's literally just over a dozen jurisdictions globally that actually have a low-carbon grid. In Canada, we're BC, Ontario, Manitoba, Quebec, and if they ever get the dam built in Newfoundland, be Newfoundland. We have so much renewable energy capacity here that, you know, we should be falling all over ourselves to become the leader in green, zero carbon metals. And you talked about some of the supply chain issues, just some of the practicalities with the car industry. So, GM or Ford want to retool and spend $2 billion rebuilding a plant or building a new plant. Permitting takes months, and there's no major roadblock, right? You just have to go through a tick the box exercise. Asian company partners with car company, wants to build battery plant in Sarnia. Permitting is months. There's no real roadblocks. The company that needs to supply the raw materials to provide that are necessary for those batteries in those cars, we're hoping it'll be 2 years in the province and 3 years for the feds. There is a fundamental disconnect. In the previous conversation about going to Korea, I mean, they want, they're like, well, my plant's going to be online in 2025 or 2026. I don't need your nickel in 2027, 2028. I'd like it a few years earlier. And can we start working on the government to again, you need to do the work. You can't skip steps. No. But we're still in the penalty box for the sins of 30, 40, and 50 years ago, and I think that fundamentally needs to change.
Can I?
Yeah,
I'll pick
by
up.
all means.
It has to change. We as a country are so good at developing our resources, but then we ship them overseas, and then we buy it back, and then we put it into the auto manufacturing chain or whatever chain it goes into, and so that needs to stop. If you just think of the footprint that you create by doing that shipping back and forth, let alone the costs. It has to stop, and we have the ability now with the power as clean power, as Mark mentioned, but also our endowment of forests, boreal forests, and other biodiversity. We actually have one of the cleaner footprints, period, on this globe. We have 900 million acres of forest. It's 9% of the forest worldwide. 700 million is pristine, and it's been logged in the past, but you know what I mean. It's untouched, and there's no industry. You combine our clean power with that type of preservation and conservation, and if we could stop exporting these resources to just import them again and put it all into one chain, again, back to your point of renovating the house with all new technology through that chain. My gosh, we could do well. We could do really, really well.
Well, I hope Ottawa's listening. I think Quebec City's listening. They're not too far away. I think Plan Nord was a brilliant stroke of genius. Staying away from politics, it just was a smart thing to do, akin to building the railway across Canada. Similar vision. Let's get a little bit into a little bit more, dive down into some verticals. Phil, you run the U.S.'s top silver producer. We don't think of silver as a decarbonization metal, yet it is. Yeah. So I, for one, need an education on that. So, so could you give us a sense of how silver plays a role, sure, and perhaps also lead and zinc, which you also mine?
Well, the short answer, silver, it's physics. Egizio, it's physics.
Yeah.
And what is it? It's, silver is the most conductive metal. It's the most reflective metal. As a result of that, it is one of the primary metals that goes into solar panels. It's also, on the brushings on the wind energy. It's also all of the contacts that you have on the electric vehicles. So it plays this large role, but it's primarily in solar. And you could use copper, but you talked earlier about the efficiency. Well, the efficiency of silver is so much more than the efficiency of copper, and the copper degrades. The silver will have a life of 25, 30 years. Copper, not so much. So as a result of that, silver or solar panels are going to play a major role in this decarbonization. And how big is that going to be? It's hard to say. Certainly we see the U.S. Energy Administration, Information Administration, suggesting that the demand for silver for just solar panels is going to be about 500 million ounces by 2050. Today it's 120 million ounces. And the total silver market's about 1 billion ounces. So this demand for silver in solar panels is just going to grow in a way that we haven't seen before, and you can't do it without it.
Is more silver in a panel make it more efficient in all of the things being equal?
Yeah.
So we're going to, as we strive for efficiency,
right.
You think we ought to use, and what about the recycling of silver?
That will certainly happen, but it's a 25-year cycle, and until you build the stuff, you're not going to be able to recycle it.
Right. Got it. Mark, let's talk a little bit about, I know you heard in the previous talk, I'm not sure if everybody was in here, probably, but maybe we'll dive a little bit down, and I was interested in, so you're at Canada Nickel, you're going to be producing rock, basically tailings, that is going to absorb CO2. So again, take us through what the composition of the rock is for the geos in here, how it actually happens, and how much CO2 could, based on the production of 42,000 tons a year, how much CO2 will be taken out of the environment by your phase one process, if I can call it that?
Sure. So our deposit is hosted in minerals that belong to a family of ultramafic rocks. Michael's is as well. And so this family of rocks has a property, so they're made up of magnesium silicate minerals. These magnesium silicate minerals, when they're dug out of the ground and are brought to room temperature, if you have charts that show where things end up geochemically, they would like to grab a CO2 molecule and turn themselves into a mineral called magnesite. And so again, you don't never think of rocks as doing something spontaneous. Rock is rock. But this process, is very spontaneous. If you have a chunk, it comes out of the ground basically dark black to dark green, and any chunk of this rock within a year has this white coating all over it. And that white coating is a mineral called magnesite, which is a magnesium carbonate mineral, and it just got there by grabbing CO2 out of the air. The fact that we're going to grind that rock up to recover the nickel creates a lot more surface area for that reaction to happen. Now, this is a process that happens in geological time. We would like it to happen in industrial process time. So there's a whole pile of research, and there's deposits in British Columbia. FBX has been one of the leaders in that space. And so we're all looking for ways to basically accelerate and increase the amount of carbon that those rock can capture as quickly as possible. We've seen in terms of some of the, again, lab results, we'll need to figure out how to do it at an industrial scale, but based on what we're seeing, we're pretty confident. If you're looking at capturing the order of 10 kilos for every ton of rock you mine, we'll be processing 43 million tons of rock a year. That'll generate, that volume, roughly that volume of tailings. So, you're looking at, almost 500,000 tons of carbon credits a year that'll be, spontaneously absorbed. If people want to read more about it, there's a company called CarbFix in Iceland. They operate the equivalent of a giant soda stream machine that takes carbon from another company that sucks it out of the atmosphere, and they put it in liquid and inject it into one of the other rocks in this family of rocks that's takes longer to carbonate, but they're literally carbonating the rocks in situ. The process causes the rocks to crack, which allows more fluid to keep going, so it's this kind of spontaneous reaction, and all that CO2 gets soaked up within months. Now, they're doing it, that's a pretty complicated process, so it's a lot more expensive than, being able to find ways to, get more air and more contact with our tailings. So it really is a tremendous opportunity. And again, to give you an idea of how big that is, the U.S. Department of Energy has an ARPA program that basically is government funded, and they're literally throwing hundreds of millions of dollars for research into this area, because they just see that this is really one of the real high potential areas to actually do something serious about carbon.
So, a simple question. If it wasn't for the nickel in the rock, and we just had the rock, would it be worth mining, crushing it up, and putting it out there? And and sucking up CO2. And I know Michael's going to have to answer that because there's two sides of the equation. What's that CO2 credit going to be worth? But is it actually doable just to mine very, very low grade or non-mineralized rock and do this?
Well, that again, it'll depend on the carbon price, but the CarbFix guys are injecting it into rocks in situ. That takes temperature, pressure, a bunch of, and you can only do it in a certain area. In a place like Timmins where you have a lot of this rock relatively close to the surface, it might make, who knows, that it may make sense to do that. And again, these research programs that the government is doing, they're trying to find, what's the optimal way to make that, make that whole process happen.
Michael, are there any technologies that you're working with that are going to help with either capturing CO2 or reducing CO2? Tell us about some of the things that you're working on.
On the CO2 front, our work is the exact same as Mark's, and it's even often the same groups. And you mentioned FPX, they've been leading. There's another group in the US actually as well, similar university group doing the same. Working with both, and our neighbor Semanier actually is looking at the same, because they've also got ultramafic rocks. No, my innovations are in other areas of recycling and progressive mining acts.
Michael, so carbon credits and the generation of carbon credits, we could have a whole conference on that. In fact, I think we might have one at Stifel at some point. We did have one, excuse me. My apologies. We had one on carbon. And it's a complicated subject, but take us through it essentially. What is a carbon credit? How is it generated? How does it get audited? How does it stay audited? And then where are where's carbon pricing going? He gave us a little sense of that. And when are we going to get to ultimately, pure carbon sequestration, like one of these big fans that they have? Where does that become a real and economic? So take us through a little bit of this. It's a complicated subject.
Yeah, that's something we could spend.
To do it in less than 5 minutes.
We've got 23 minutes here, but so just generally speaking, if you, as I mentioned before, if you take 1 ton of CO2 out of the air, or if you stop that 1 ton of CO2 going into the air, then you can create a carbon credit. And that carbon credit it then needs to be verified, and there are various verifying agencies out there. It was a real sort of hodgepodge of verification methods going back to 1998 with the Kyoto Protocol when we first started getting involved in this. But now the world seems to be closing in on a few companies, a few organizations that do it. Verra is one of them. And once you've been audited and once it's realized that yes, indeed you have pulled 1 ton of CO2 out of the atmosphere or stopped it from going into the atmosphere, then you have it verified. So the audit's done, verification is there, and then you can take that carbon credit and you can sell it. It's very much like the commodity markets today. You can sell it either privately to a company that needs those carbon credits by way of a private contract, or you can put it onto an exchange and sell it through an exchange. And there are various exchanges in the world, the big ones in Europe, but there's also some here in North America. Canada, as an example, just last week announced its trading platform, so it's live now. That's fresh. I can't remember the name of it. It's in my notes, but that's just happened. So once it's verified and put up onto an exchange, then that exchange, if it's the European exchange, will on-sell it. But they'll also hold it again, like metals. They'll hold back some of these credits to have in reserve. And that reserve was actually just tested, amazingly, here during the Ukraine crisis, because the world wants to stop buying fossil fuels from Russia. So in order to do that, they had to implement new trade routes, new forms of fossil fuels into Europe, and that caused an upset in this drive towards carbon neutrality. And they actually released 250 million credits into the market to allow for this, stabilization of this push towards neutrality. That was 20 billion euros worth of credits, and they were purchased, and that equates to about 80 euros per credit, so 80 euros per ton of CO2. So it's a commodity. It's absolutely like any other commodity that is essential and that is necessary and trades. So,
how is it audited, and how can we trust the voraciousness of the audit?
So it's no different than auditing financial statements, let's say, right? You'll have your companies that are well known for the practice, and they're verified as auditors. And when you tick the boxes and they say yes, indeed, this is a credit, then it becomes a carbon credit, right? As I mentioned before, there are different types of credits, and this is evolving. It's evolving month over month, year over year. But in addition to being able to mechanically avoid carbon going into the air or pulling carbon out of the air, we also have to stop the planet, stop ourselves from destroying our natural carbon sinks on the planet. And so there's been a shift by the world to not just, I call it mechanically, not just mechanically creating credits, but also creating credits through the preservation and conservation of our biodiversity on the planet. And it's in an effort to have Brazil, let's say, not destroy its rainforest to grow palm trees for palm oil, as an example, right? You have to have that land become a cash crop in terms of creating carbon credits. And this will go back into the same credit scheme, as I mentioned, in terms of verification. But this is a real shift, and it's necessary because we literally have to, save the planet by having our world be the main carbon sink, and then all this other work, like what Mark's doing, can be the ancillary carbon sinks as well. But it's big business, and I know I'm going on, and I'm sorry I'm eating into time here, but Mark mentioned the DARPA program. The programs in the U.S., there's a $35 billion program to try and make these, you call them like machines that pull CO2 out of the air. If you can create a hub of these, there's $35 billion available for that. And your work will be part of that, because it is a natural way to pull CO2 out of the air. So it's real, and it's happening now, and governments are paying for it as well. It's not just corporations, right?
So in other words, we're paying for it.
Yeah.
Yeah. I knew the answer to the question.
But
Phil,
companies are paying for it as well.
What's that?
I said companies are paying for it as well. I mean, we're Hecla, because we have such a small footprint, we only produce 76,000 tons of CO2. Because as you talked about before, the hydro, every place we operate, we're on hydro.
Right.
And so the only CO2 we're producing comes from our underground mining fleet and the few, surface vehicles that we have. So as a result of that, we've been able to make that investment in order to be net zero. So, this is something people talk about doing 20 years from now, 30 years from now. We're already there. And so what our focus is on, okay, how do we take that 76,000 tons and take it down to zero?
So Phil, you produce lead, zinc. Tell us, are you going to be buying these carbon credits? Because you're going to be...
We already have.
You already have. And you get dinged for Scope 1, Scope 2, and Scope 3 emissions.
Yeah, so when I say we're only looking at Scope 1 and 2, we just find that Scope 3 at this point, it's there's too many different ways of measuring that. And at this point, we're just putting it aside, and we're committed to measuring it by 2025, and then figuring out how do we bring this to zero.
And what's been the response by your shareholders to your carbon strategy?
They're surprised. That's the response is really surprised, not recognizing that you can actually get to zero already.
So what you've just described is the voluntary market, and I'm actually curious. The voluntary market, there's a lot of persuasion, there's a lot of force, not just by government but by institutions, to push companies towards what you've just done, what you've just said.
Right.
Are your institutional shareholders, are they applauding you, or are you having other funds approach you saying, hey, you're net zero, we'll invest in you now, or we'll give you a green bond, or
look,
you know what I mean?
Yeah, look, part of the problem at the moment is mining is put into a negative box. And so within these organizations that are evaluating who's green enough, they are dinging all mining companies. So it's still an uphill battle. There still is a lack of realization that we're part of the solution, not the problem. And so it's going to take some time, I think, for that to change.
So I get the sense we're early still. I think shareholders and investors that are, and if there's any of you in the audience, I think they're still trying to figure out what this all means and what measuring stick are they going to use. It's still very much.
Yeah, the SEC, what the steps they take will make a big difference.
Their steps are, and along with, it's the same as the OSC.
Yeah.
It's the first step is to have you put into your financial statements what your carbon footprint is, right?
Right.
Well, I think it's the regulators, it's the auditing firms that need to come up with a way for people to report it. Reporting it, everybody gets to the financial statements differently, but all the financial statements look the same. And I think you got to get to a reporting standard, and then everybody works towards that and gets there the way.
We report to 4 standards.
What's that?
We report to 4 standards. It's really problematic.
Well, if we get to only 4 ESG standards, we'll have done really well, because there's many more than that. Want to get back to a very topic. We'll leave up some room for some questions here and maybe some more comments. But Mark, I wanted to come back to you. We had a really interesting data point: $100,000 nickel, and we talked about it a little bit. There's a bunch of pinch points coming, and we can argue whether it's lithium, nickel. It could even be silver, Phil, and heck, we can see carbon credits all of a sudden. The pressure's on, go up, spike up where we are. But so where is nickel going in terms of what type of nickel is going to be used in EV? What does that mean for the price? We've heard all kinds of discussions about bifurcation of pricing and in the nickel market. Some people believe it's along the lines of the type of nickel produced, but perhaps it's not. And I know you have some thoughts on that. So why don't you maybe talk a little bit about that, Mark?
Yeah. So the one thing with nickel, we've gone through some pretty fundamental shifts. Over the last 40 years. 40, 50 years ago, it was basically Sudbury, Norilsk, and a few others, and they basically dominated supply. Prices spiked, and we got new sources of supply into the market. But again, even 20 years ago, 2/3 of the world nickel came from sulfide mines. China came along, we couldn't make enough nickel for China for all the stainless steel it needed, and companies in China like Tsingshan went from being a tiny little stainless producer to being 2x the world's next largest nickel producer, and now 2/3 of nickel comes from laterite deposits. My view is we're about to enter another sort of big fundamental shift to go on here. The problem with all this laterite nickel, comes from a few islands in Indonesia, because they're basically taking a ton of soggy dirt and melting it with a lot of electricity that's powered by coal. It has this massive 50 to 90 ton carbon footprint associated with it. And again, given the geopolitical issues of the day, Western automakers aren't going to be, particularly keen to buy nickel from that part of the world. There's been a lot of talk of Class 1 versus Class 2 nickel, and that those markets are separate. It was always, to me, fundamentally flawed, because you can take ore from either a laterite deposit or sulfide deposit and send it on its way, and there's really no constraint there. I think where the real battle lines are going to be drawn, and the market lines going forward, are really going to be low carbon versus high carbon, and then Chinese controlled versus non-Chinese controlled. And right now, more than 100% of nickel supply growth for the last 6 years has all come from high carbon Chinese controlled supply. The world going forward is not, can't survive that way. And so, some of these, I think the ability to produce a low carbon product is going to have value, additional value. And I think, to be a supplier who's not coming from a effectively Chinese controlled part of the world is also going to have a lot of value. And again, this is all going to unfold in the next sort of 5 to 7 years. So I think it's going to be, pretty fascinating, and again, can create some real torque in terms of some of the investment stories that are out there.
So Canadian nickel, largely produced from pretty good reliable sources and cleaner sources of energy.
Yeah.
You think that these types of areas like Canada will get a premium pricing for their nickel?
Yeah. Oh, no. Yeah. I mean, as in the earlier talk, quoted some work done by Macquarie, doing a good job sort of looking at what the premium for a low carbon product is. I mean, again, going back to that, the internet versus retail analogy back in the 90s, again, would you have wanted to buy Amazon back in the, early to mid 1990s? When you look at the mining world today, it really kind of goes in a few buckets. You've got mining operations that are in remote locations that are using diesel and coal. They've got no other choice, and they're flying everything in and out. Those things are always going to be high carbon. You're going to be in places where you have access to infrastructure, so you can kind of tweak your carbon footprint and get it down a little bit. Then you're, like us, who are in jurisdictions that have access to hydroelectric power, that gets a tick. And then, again, those of us who have these ultramafic rocks, are in this real specialty bucket. Again, if you think of Amazon versus retail, do I want to buy Barnes & Noble or Amazon in 1995? Right now, the government is effectively taxing Barnes & Noble with a substantial tax on top and wants you to go buy your books at Amazon. I think the market really hasn't realized that there aren't many in the right hand side of the column. And again, Amazon traded at massive premium valuations for a long time. And again, I think once the market wakes up, you're going to see mining assets that are able to sort of fall into those right-hand buckets should be trading at a premium valuation as this all unfolds.
It'll be interesting to see which market trades, how you trade the premium. Is the LME going to go to 2 or 3 different types of contracts?
Yep.
All of that, maybe that's another discussion. We've got about just under 9 minutes left. Not too many people have left the room. That's good. Questions, Joanne, I'm not sure exactly how, but if there are any questions, can somebody put up their hand? If not, we'll continue the conversation. Don't feel compelled, but I'm sure that it's a stimulating conversation. Is that you, Alex?
Oh,
like what a salesman
hang on,
pays
we'll pass
attention.
you a microphone, all right? Thank you.
Yeah, thanks, gentlemen. Nice presentation and discussion. My question is really related to, I guess, the uptake of electric vehicles. I think there's obviously no debate about the demand in terms of the supply downstream. I'm just curious, do you see it as they're building out the infrastructure and then we have kind of demand coming in with the EVs, or are they building out the EVs in kind of the urban stations and then the sort of infrastructure follows?
Michael, maybe why don't you take that?
Yeah, they have to go hand in hand, obviously. Tesla kind of led the way with one example. I think others are following. We're looking at a spectacular demand for minerals in North America, copper for the grid to run all this and to move power between dams and solar cells and everything else, and then nickel to store it. So my short answer is they really have to go lockstep with each other, Gentlemen? Yeah.
Any other thoughts?
Yeah, I think one thing, the sort of the infrastructure risk to demand, I think gets overplayed a little bit. I can plug in a large portion of homes can plug in at their house. I never had a gasoline tank at my house to pump my car. So, so I think, again, to get to 100% penetration, yeah, that last 30 or 40% is going to be painful. But that first 50 to 60%, I don't think is going to be infrastructure constrained at this point.
Although I could ask you, sorry, go ahead.
Oh, I was just going to add, in terms of the infrastructure, if you're charging overnight at home, then I agree. The infrastructure will get us so far that's in place. But rapid stations, right? This idea that you can pull up and you can charge your car in 10 minutes, 15 minutes to get it more in line with filling up a tank of gas, that's going to take an overhaul, because that sucks a lot of power in a short period of time. And I spoke to this gentleman at the London Transit who's in charge of that for all of London, and it's a serious problem in terms of trying to bring that type of power into certain areas in the city.
Do you guys know what would happen if at 5 o'clock in the afternoon everybody in your neighborhood plugged in their Tesla?
Yeah, if you're trickle charging, it's one thing, but if it's rapid charge, so you'll see the lights dim.
Even the trickle charge, you're taking kilojoules, a lot of kilojoules that were sitting at the gas station up the street, and now they got to run those kilojoules, got to run through those wires, right? Are the wires good enough? I mean, there's obviously a great upgrade. We all know that's coming, but it's a good question. I look at all of this as kilojoule, just an equation. Where's the energy going to come from? If it's, some things will never replace. Like no one's flying from LA to Sydney in the next 20 years in an electric plane, unless they're crazy. I don't even know if the plane could get off the ground with all those batteries. But anyway, Alex, thanks for the question. Any other questions out there?
Any other questions from the audience?
Back there.
One over there.
Good afternoon, everyone. Belinda Labatt, Lamico Metals, great presentation. I was hoping you could address social acceptability, because what we're asking people to do is to take mines that they previously didn't have to look at, that are in other continents, and localize these projects, large industrial projects throughout North America. That's what we need to do to move this forward. And I'm wondering, with your experience to date, what would you think needs to be done differently from the social acceptability perspective? And anything from the way we talk about these projects to how they're being run to engagement, benefit agreements. I just leave it open to you to see what would you do differently, what needs to be done differently. Thank you.
Shall I start from the U.S. and then? Sure. Okay. Traveling in the U.S., Americans have really got the memo about critical minerals and critical mineral supply. I think Phil said that quite well. And that's the shifts that I've seen in the past years. It used to be about rare earths several years ago, and now suddenly it's about nickel and cobalt and everything else. So they're very inclined to be more interested in domestic supply. You're absolutely right that mining hasn't done a great job of presenting itself through the past bear market. And there are some failures that don't help that, but we are part of the solution, and we're showing that. And to answer the question, the work we're doing in CO2, the work that Teck does recycling electronics in their smelter, that my neighbor Sibanye does recycling catalytic converters, that's all just helping, and it's essential. I think their good neighbor agreement is also a template for the industry and kind of a way forward. So on the American side, I think it's a continued effort in those regards.
Yeah, on the Canadian side, again, where we are in Timmins, very, very lucky that there's very broad acceptance of mining and mineral processing, because we need both. I think it's a real challenge to be able to actually get that all done in the time frame that we need to get done, because it's a political discussion that has to trickle down to local communities. And to be honest, again, I talked about the sins of the past from 30 to 50 years ago, but we all know some recent incidents with some pretty high-profile companies that did not help, sell the plan. So we just need to get way better at marketing our successes. I don't think we do that well enough as an industry, and hopefully we can change enough minds, that people, we need to go from a mine being, somebody said this, we need to go from a mine being needed to a mine being wanted. Because that's the case for a lot of other industries.
Yeah, and just in terms of social acceptability, a lot of these mines are in remote communities. A lot of these mines are on lands that are owned by First Nations, and we look to companies like Big Tree Carbon Just full disclosure, I own it and I also advise them, but it's owned, operated, controlled it's a public company by First Nations in Ontario, and they have an initiative to create carbon credits through the preservation and conservation of boreal forests. The reason I bring that up is the money that's created from that, the programs that are created from that, the empowerment that comes with that back to the First Nation communities will allow them to, I believe, do better with industry and do better in terms of this entire supply chain and the awareness of the supply chain and what needs to be done in order to keep the carbon footprint at zero, but also to do much better socially. So you get the E and you get the S in that sense.
Let me just make one comment. So we have about 15 mines and projects. The local support we have is unparalleled, and it has been for a long time. The issue is not where these mines are, because they are in largely remote areas. The issue is in the media and various places in the world, and it's with NGOs that have a cottage industry that makes money and stays in business by attacking these projects. It's not a local issue.
How do you, Phil? I was going to say, as the only CEO on the stage here, how do you address the issues that Belinda's brought up? How what does mining have to do?
It is that change in the view that mining is part of the solution rather than the problem. And so what happens is, frankly, the NGOs end up splitting, and we're already seeing that.
So the question becomes, and we'll maybe this, if I give the liberty to ask one last question, is ultimately the having mining go from being needed to being wanted, is that a push or a pull? In other words, is that going to be pushed on people, or is society ultimately going to come to its senses? I mean,
it's a realization. In my view, it's a realization that we have to have this in order to get to where we want to get to.
All right. Yeah. Well, look, it's panels like this and it's conferences like this that help us answer the question. So the more we talk about this in an open forum like this, I think the more that we learn and get to the point where we're going to get mines wanted as opposed to needed. But look, Michael, Mark, Phil, Michael, thank you very much. Thank you for your thoughts. Thank you for your insights. Really appreciate it. Thank you.
Thank you, Egizio.
And gentlemen, if you can just remain seated for 1 minute, I'm just going to close out the day, and then we can all exit stage. All right? Thank you. I'd like to thank everyone for a fantastic day and for your participation. Thanks again to all of our fantastic sponsors and partners. We couldn't have done this without you. I'd like to remind everyone to join us this evening for the Laurentian Bank and Troilus Cocktail Networking event at 6 p.m. at the Frontenac Room. And later this evening, our wonderful host, Stifel GMP, is holding an After Dark event at the Sam Lounge in the Chateau Frontenac from 9 p.m. till 12 midnight. And please wear your badge. No badge, no drink. Remember. All right. Thank you.